I say good morning, good afternoon, depending on where you are, and welcome to today's webinar. My name is Steve Philp, and I'm the Partnership Director at Portugal Pathways and your host for today's webinar. It's my pleasure to welcome you to this exclusive event. We will be delving into Portugal's proposed TISRI, bit of a mouthful. That stands for Tax Incentive Scheme for Scientific Research and Innovation. Not surprisingly, it's now more commonly known as the NHR 2.0 tax regime. As I said, this is the working title everyone is using to describe it, and it's set to replace the current NHR tax regime for new entrants in 2025. NHR 2.0 tax status aims to attract entrepreneurs, professionals, innovators, and academics, realigning Portugal's tax incentives to boost productivity and growth. While retirees with private pensions may see fewer benefits under NHR 2.0, other incentives are more advantageous than the old regime. For new affluent expats coming to Portugal or existing NHR tax holders, it is crucial to consult a cross-border international tax advisor and wealth manager early on to ensure optimal tax efficiency and security. Today, our panel of tax advisors and family office experts and wealth management specialists will offer insight into eligibility and key differences between the old and the new tax regimes. We'll also be discussing the potential changes that the new government might implement based on recent legislation and expert insight. We'll also be covering the grandfathering conditions that still allow new entrants access to the old NHR tax regime in 2024, provided, of course, that they meet the Portuguese government's criteria and proof of intent. Our team at Portugal Pathways can assist with arranging meetings with any of our tax and wealth management experts after this webinar. Additionally, our experts will be highlighting the importance of structuring non-Portugal income or assets for both current NHR holders and future residents, plus how any Portugal-derived income or assets will be potentially treated. We'll be touching on the Golden Visa Residency by Investment Programme. This offers flexibility of where you have your tax status and gives your whole family access to the 29 EU Schengen region countries, and only requires that you be in Portugal for 7 days of the year. Now, this benefit lasts for 5 years, at which point you can choose to take up permanent residency or extend the visa. Our discussions will also look at how to mitigate the burdens of progressive tax by taking early professional advice. We'll also touch on tax succession planning, emphasizing the need for dual wills for Portugal and your country of origin. We'll also be having a Q&A at the end, so we really encourage you to engage in our chat, post questions, post comments. And again, if we can't get all to all the questions today, and we've got well over 120 of you in the audience, if we can't get to all of those questions in the hour, our team will be following up with answers within 48 hours, and we'll be posting those to our website. I just want to state that unfortunately, specific questions that are aligned to your own circumstances will require a separate one-to-one discovery call, which we can, of course, arrange. As you're well aware, everyone's personal circumstances are different, and we're keen not to give out any conflicting guidance. Remember, obviously, that any tax or financial advice should come from a formally instructed professional. Today is for general guidance only, sort of ahead of any discovery calls that obviously you may have with our panelists or with our other professional partners, and where they obviously can discuss your unique situation. So I want to get started, and I want to introduce our panel of experts today. Firstly, we have Maria Alvarez Garcia. Maria is the partner of Vida Advisors, who operate regulated investment funds approved for golden visas in Portugal. Maria is overseeing tax, legal and fundraising, having co-founded a 250 million euro multi-platform previously. Maria also has experience in investment Market Bank and Barclays Capital, and as an M&A and tax lawyer at Freshfields Bruckhaus Deringer. Welcome, Maria. Joining Maria, we have Niall McDonald. Niall is a cross-border wealth manager who's based out of Portugal and supports numerous affluent families in Portugal, especially those looking at tax status in Portugal or already under NHR tax regime. And also, obviously, the need to plan and structure their income and assets for their life in Portugal. And finally, joining Maria and Niall is Camila Rissa de Souza, who's Director and Tax Manager at BDO International. She's responsible for global expats coming to Portugal, providing international and Portuguese tax advice to individual clients, national and foreign, VIPs with high net worth, and of course, expatriates. Just a quick note for everybody watching today. Today's webinar is being recorded and that will be sent out to everybody within the next 24 hours. So let's get going. Let's first start by discussing the newly proposed NHR 2.0. As I'm sure many of you in our audience today are interested in this, and obviously how it compares to the old NHR program that finished to new entrants this year. Formerly known as the Tax Incentive for Scientific Research and Innovation, the newly proposed NHR 2.0 tax regime is mainly aimed at researchers, entrepreneurs, inventors, and obviously certain professionals. So the first question that I've got to the panel is sort of to discuss really the main purpose of this proposed tax regime and how it will benefit Portugal, as well as exactly who qualifies this. And I'm going to go to Camilla to start with.
Hello, everybody. I'm very delighted to be here. It's a pleasure to join this webinar with you. Portugal Pathways. So in terms of this new legislation that's in force since the 1st of January 2024, so this present year, we have a very significant change on the non-habitual resident tax regime. In fact, on the name, because the non-habitual resident tax regime had been revoked with some possibility to apply in 2024, still in 2024, that we will explain in this webinar. So this regime now, this new one, the name, as Steve mentioned, is the Tax Incentive Regime for Scientific Research and Innovation. So what's the requirements to be framed on this special regime? So the requirements are three main requirements. The first one is to be considered as a Portuguese tax resident, which means that you need to be in Portugal more than 183 days on the last 12 months, or you need to have a home here in Portugal that's your main abode, rented house or bought house. So this is the main criteria for tax residency. The second criteria for this special regime is not to be lived in Portugal for the past 5 years. So this criteria is the same as all the old regime. The new criteria that we have is, if you want to apply for this new regime, you need to prove that you are develop some specific activities in Portugal. The state budget that changed the law in Portugal mention about some specific activities and others that had not been regulated yet. There is no rules yet that is in force to regulate some activities. So this regime is very new here in Portugal. We have 6 months not 6 months, but like 6 months with this new regime. And I believe that the government still don't know how to use it as it is. But I believe that on the end of this webinar, everybody will see that this regime, in fact, is better than the old one. So the first criteria will be tax resident, not be tax resident on the past 5 years that relocate to Portugal. And you need to prove some activities as university teachers or scientific research, worker or board member of innovation companies. We also have work on board member of entity with contractual benefits investments in Portugal, high value activity in entities with innovation and research innovation and research, how can I say it's innovation and research, specific codes of activities in Portugal for these high value activities. And also we have some, in terms of the high value activities, something that's very good to be appointed. The rule mentioned that will be ordinance that will define what is this high value activity, but it's not, there is nothing yet, so is still applying the old ordinance related to the high value activities. However, the company that you are developing these activities must export more than 50% of its revenue, and for these activities you need to, that you are developing in Portugal, you could not have a master or doctor degree. More than all of that, we have some other types that it's working on or be a member of the board in startups. That's very good, because we have a specific rule for startups here in Portugal, that we can also have a very advantages in terms of incentives here, or work or self-employed in the islands, Azores and Madeira, independent of the activity that you will be developing in these areas. Worker in research and development in projects eligible for CFID, that's a specific system of tax incentives in Portugal. And work on board members in activities to be determined by some specific organizations here in Portugal that is not yet in force. This is the resume. So you need to be in mind that to be framed on this regime for 10 years, you can use it for 10 years. You need to fulfill these 3 criteria, that is, be tax resident, not to be tax resident on the past 5 years, and develop some of the activities that you can check on the screen.
That's great, real detailed insight. Maria, is there anything that you wanted to add?
Yeah, I think something that's probably worth, Camila, to come back a little bit on how the amendment was done. So we had changes of the parliament here in Portugal in March. The left-wing party that was basically in government previously made these amendments to the budget in a rush. And in fact, the new government that now is in the parliament did not even comment on the older approved version, because they actually manifested in their electoral program that they were going to amend again the NHR. So what's the expectation of, can we see future changes to the NHR? Should we be waiting to see what's happening next with the new government? I would like Camila a little bit to explain.
I believe so. We really believe so. Why we believe in this? Because all the changes that happened was very fast. I don't think that the past government have time to think about what happened. The change, all the discussions of the changes started on October 2023. in an interview of the Prime Minister that it's a crisis of the accommodation in Portugal and the real estate, it's crowded. And he said, okay, we will end the non-habitual resident tax regime. And we said, what is the relation between accommodations, the problem that we are facing here in Portugal, and the NHR? There is no link between those matters. And so the state budget had been amended, I believe, 3 times before the law had been published. The law had been published on, I believe that on the last day of 2023, being forced on 1st of January 2024. And six months after this, we don't have any specific regulation. So what I believe is that we have elections, the new government. I believe that they don't want to put the hands on these change. I believe that they will change because most of these specific activities that who qualifies for the NHR, there is no specific regulation. So in terms, one example, in terms of the high value activities, they are still using the past ordinance. And on the past ordinance, there is nothing that deny the regime related to have a master degree or a doctorate degree. That we know that most of the people now, the new students, have master because the master is also linked with the university degree. So this is something that there is no sense on that. So I believe that something will happen. I believe that some change could happen for better, for sure, for better, for sure. Because the only concern of this regime is we can reduce the applications, we can reduce who can apply for that. Because in terms of tax benefits, they open a lot of the tax benefits. So if they said, oh, the past NHR, it's favorable, it's not good for active incomes, it's good for passive incomes. But if you see the new one, if the past one is good, the new one, it's super good.
Yeah,
So,
absolutely.
yeah.
Absolutely. I think a lot of the audience will be interested in hearing. I know we've got a slide, Kimberly, if you want to sort of talk to that. So I'll just take this one down, and we'll just put our next slide up, which talks directly to that. You know, you were sort of alluding to the fact that, you know, that the new NHR, in compared to the old NHR, is superior in a lot of ways. I mean, you know, you can see the figures there. But again, if you want to sort of talk us through and sort of, you know, give us some insight into, you know, how and maybe why that came about.
Yeah, so the main change on the NHR that we have now, the new one, this new one regime is related to capital gains, because the capital gains on stocks, as usual under the double taxation treaty, it's the competence of taxation is on the state of tax residency. When this happens, Portugal could not exempt, but with this new regime, there is no mention on that. So if you have capital gains, if you have interest, capital incomes, if you have dividends, interest, other type of incomes, you'll be full exempt. Other difference that we have now is in terms of other investment incomes, that the double taxation treaty that could mention that other type of incomes that on the past regime could be taxed on 28 and now could be exempt, because the new rule in terms of how to tax the new regime don't mention about double taxation treaties. So they only mention that if it's foreign incomes with some typification or employment income, self-employment income, capital income, rental income will be exempt. So let me just see one thing that's very important here, because what is this new rule? Yes, this mentions exactly. The only thing that could not be good is in terms of the pension, the retirement, because the retirement, they equiparated NHRs with tax residents. There is no difference. If you are tax resident and if you apply the NHR, you'll be taxed on the progressive tax rate. There is no special rate, because this special rate on the retirement had been amended in April 2020. Before April 2020, it's full exempt. So After 2020, the taxation of the retirement had been 10%. Now will be progressive tax rates. This is the main difference. I believe that this screen is crucial because you can see the resume of the tax, the rate that could be applicable to your portfolio of incomes.
Yeah.
I believe that.
So Maria, I mean, obviously with your obviously investment hat on, how do you think the new NHR 2.0 is going to go down with investors?
I think for those holding just passive income, it's going to be difficult to qualify for some of the criteria. So I do think you have to be coming to live to Portugal and fit with one of those. For example, if you're a board member of a company, or if you're probably not going to follow, you're just receiving passive income from dividends or capital gains because you've been very successful offshore and you want to move here, which was one of the main, or one of the more common scenarios for the application of the NHR. In that case, I think it's going to be tougher to meet the requirements to apply it. Hopefully, I think the government, it's my wish list, that we may go back to a similar scenario where we were in December 2023. And if they could maintain the capital gains exemption, then it would be great for everyone.
Yeah.
But I do expect some changes, because the fact that PSD did not put one single amendment to when the legislation was passed through Parliament. And on the other side, for example, on the golden visa regulation, it took them like 8 months to pass comments. It probably means that they'll have to say something quite quickly about the NHR.
Absolutely. So like as you said, it's watch this space as well, isn't it? It is watch this space. So thank you, everybody. I think we sort of like really sort of nailed down some of the advantages of obviously the new NHR, but also maybe dispel some of the myths that are around it. But as we said, obviously we hope this sheds some light on the newly proposed regime and obviously how it will work. However, we keep reiterating, nothing yet is set in stone, so there may be some changes in the coming months. Moving on now, I'd like to focus a little bit on the old NHR tax regime and its grandfathering conditions for those obviously who are still interested in inquiring the tax status. So what must they have in place, and by when to fit the criteria that's set out by the government? Camilla, do you want to sort of take this one?
Yes, of course. So in terms of the grandfather rulings, the change that we have is you can still apply for the old regime, the NHR 1.0, that we can say that, if you become a tax resident in Portugal in 2024. So if you think about to come to Portugal in 2025, please close your art, because it's not for you. It's just for if you come to Portugal and be tax resident in 2024. So you need to fulfill the criteria for tax residency still in 2024. If you apply the regime in 2026, 2027, no problem. But the first year must be 2024. So the grandfather rulings is related a lot with the amendment of the rules, because when we heard about the first time that we heard about the amendment of the rules on the NHR, it's October 2023. So the grandfather rules mentioned that if you wanted to apply for the NHR still in 2024, you needed to be considered as a Portuguese tax resident still in 2024. You must be considered as a tax resident from 2019 to 2023, the past 5 full tax years. One amendment that's very good, that here in Portugal, tax year is the same of calendar year. So 1st January, 31st of December. So the full 5 past years of non-tax residency. So the grandfather rules mentioned that you needed to fulfill one of the 7 criteria. One of them, you can apply for the NHR, the old one is still in 2024. You needed to have an employment agreement or a promise of employment agreement dated still in 2023, 31st of December. In terms of criteria of dated of December 31st, 2023. So promise or employment contract here in Portugal. You need to have a residency visa or a residence permit valid until 31st of December 2023, or you need to prove that you initiate the process of a residency visa or a residence permit here in Portugal is still in 2023, 31st of December. So you have 3 criteria with the limit of the date, it's 31st December 2023. But you also have more 3 criteria with the date of 10 October 2023. That is, if you have a lease agreement here in Portugal or another document that you prove that you could have a home at your disposal, granting the use or a possession of a real estate in Portugal. If you have a reservation contract or a promissory contract to acquire a real estate in Portugal, or if you have some dependents enrolled or matriculated in the educational establishment here in Portugal. So 3 and 3. 3 that its requirements, the limit is 10 October and 3 31st of December. And you have more 2 ones that is related to the aggregates, to dependents, to the household. If you are married with someone with the NHR and the NHR of your spouse is still in force, you can apply. The other criteria is if you are the spouse or the household of anyone that fulfill one of these 6 criteria of October or December. So it's a little extensive. We need to check one by one, but sometimes you think, oh, I could not apply, but sometimes you can apply. So this is very important that to check each of one.
That was really informative. Thank you, Camilla. So I think what we're saying to our audience is if you think that you may be able to apply via the grandfathering and that you think that you may meet the criteria, obviously please reach out to us. We can set up a no obligation call and we can look at your own circumstances and obviously see if we can obviously obtain the NHR for you through obviously the grandfathering criteria. That is obviously, we said, still open. So we're going to move on a little bit now to the tax planning and succession part. Why is this such an important factor to consider for individuals under the old NHR tax regime? And why are dual wills for Portugal and your original residence something to be seriously considered? So I'm going to bring Niall in, and I thank you, Niall, for being so patient. Could we start with you with regards to that question?
Yes. Hi, Steve, and thank you for inviting me on to the webinar, and hello everyone that is joining us today. So in terms of the wills, firstly, it's highly recommended that if you are a Portuguese tax resident and you have sizable assets in Portugal, so namely that would be property, business, or sort of any other financial asset or investments, then it's important to have a Portuguese will, as it's likely that Portuguese inheritance tax laws will then apply to that. Now, it is possible to have 2 wills. So myself being originally based in the UK, you can have still a UK will and indeed a Portuguese will. Obviously, the problem would occur if the 2 wills were slightly different. So it's very much advantageous that when you are drafting and drawing up a will, that they are coherent and referencing in terms of what they're talking about. In terms of also the practicalities of a will, it just keeps everything in order. It's better for probate. It's better for distributing the estate. So overall, it makes sense to have a Portuguese will if indeed you are Portuguese tax resident and you're planning on spending some time here. As I say, it's not compulsory, but it would certainly be beneficial in terms of wrapping up the estate, you know, when the inevitable comes to us all. And then just, yeah, sorry, Steve. And then just lastly on inheritance and that type of thing. any legitimate heirs in or under Portuguese inheritance tax, there's no tax to pay. There is effectively a stamp duty tax, but also which kind of translates more accordingly to what Portugal has. But again, as I say, any legitimate heirs won't have to pay that. So from an inheritance tax perspective, Portugal is very, very tax friendly in comparison to, for example, the UK or indeed the US or some other European countries. So if that's something that's important to people, then my recommendation would be to speak with a solicitor or a legal representative and to have Portuguese well drawn up, but then also be aware of what their assets are over here and maybe look to restructure to benefit from the inheritance tax position that Portugal does afford their residents.
Yeah, brilliant. Thank you, Niall. Camilla, anything to add on that particular subject? Oh, Camilla's on mute.
No. I don't think so.
Okay. Lovely, thank you. Well, so we'll move on to a more complicated subject of tax planning and the actual strategies employed, such as the unit link fund, life fund. So the question is, what are these? How will they work and benefit existing NHR tax holders? And who does this apply for, really? I know this is obviously a complicated question with lots of factors to consider, but I did want to touch upon it. Again, Niall, I'm going to come to you in the first instance.
Yeah, no problem, Steve. So the question that you're posing is pretty much our bread and butter, or what we do in the wealth management space, certainly internationally and here in Portugal. The thing that we get most is when people come here under the old NHR or have relocated here under the old NHR, then when you're getting closer to that point where that NHR period is going to end, quite often they're looking at ways to restructure their income, or they're restructuring their assets because they have a look at the sort of graduated Portuguese income tax rates and get a little scared. So there are ways and means in which to try and mitigate those income tax higher rates, and indeed trying to really grow the money and make it last a little longer. I mean, the product's probably not applicable if you're coming here and spending it all in cash very quickly, but if it were, then you probably wouldn't be sitting on this this webinar. You'd be out enjoying yourself somewhere on the beach. But effectively, one of the main products that we use is a Portuguese life assured investment bond, and that really covers off where the product is really held from a taxation point of view. It benefits from no income tax on the investments, no interest, or again made on the investments, no dividends tax on the investment, and no capital gains on the investment. So in summary, no tax, or very, very little in terms of withholding tax. So it's very attractive to affluent clients that we tend to deal with, that have built up considerable assets, have and are looking to shelter that from in a tax-friendly environment. The assets themselves will be based offshore. So whilst it's a Portuguese life assured investment bond, it is actually held outside. And effectively, from a taxation point of view, the only tax that you will pay on the product is when you start to take withdrawals from that investment. The product itself, whilst it can facilitate and regulate an income strategy, it does so effectively following a capital gains tax environment, so 20%. But furthermore, there are actual benefits the longer and its stages that you hold the product. So the key things are the first 4 years, and then years 5 to 8, and indeed years 9 and onwards. And furthermore, the tax benefits for the continuation and for the holding of that product can be quite considerable. Certainly when we get to the reporting stage for our clients and we present them what indeed the tax savings of that can be, many of them are almost in disbelief, really, that such a thing exists. So it's very, very attractive for those who maybe are looking to delay some income. It can be taken immediately, so the money is liquid, it's accessible. It will be, as you mentioned, unit linked, so it has the benefits of that. But it's really going to be a useful tool for people, Portuguese tax resident, which is a key thing, or looking to become Portuguese tax resident within a 12-month period. It's certainly worth doing your research and your preparation beforehand, and really looking into this particular product to see if it's available and applicable to your circumstances.
So you obviously you gave an example of planning, Niall, but how important is the time in which you start planning? Let's say year 1 of NHR versus sort of year 7. What are the differences, obviously, if any?
Sure. So as I sort of alluded to earlier, there are benefits the longer that you hold the particular product. So, for example, if we talk specifically, any tax paid is primarily based on the withdrawals and any gains within the bonus. Now, the tax rate of that it's a little complicated, but not too complicated. It's probably something that we'd want to pick up off this webinar. But in effect, it's done at 28% on any gains or any withdrawal gains from the product for the first 4 years. It then drops to 22.4% from years 5 to 8, and then tops out at 11.2% from years 9 onwards. So where this then leads it back to your original question about when would you want to plan? Well, if you do the maths, if you're on a year 1 of NHR, which we know under the grandfathering rule is potentially still available, but difficult because you have to prove a lot of things, then really the answer is as soon as possible. That's not to say if you've been here, 2, 4, 6, 8 years that this product isn't going to be helpful. The good thing with this product is it doesn't actually make a difference whether you have NHR or not for this particular product, which is actually really, really beneficial for a lot of people, because it just depends on your tax residency. So as long as you're Portuguese tax resident, then it's available for you. However, where the strategy lies is then withdrawing any value that you have in other assets whilst under NHR to then indeed fund this particular product. And that's where the planning strategy really comes in. So you can do it anytime. You can do it without NHR, or indeed you can do it at the start of the NHR. It's just where your assets are held, where they're located, and what jurisdiction they're located, owing to any double taxation agreements. So yeah, it can really be done at any time. I know it's a very vague answer, but yeah. Any
time is good, but the earlier the better, as they say.
That's it.
So I want to sort of switch track slightly and touch on the use of golden visas and how this might be used for residency and access to the rest of the EU countries, while also giving the holders the flexibility to have their tax status in a different country. This is an option that is open to some individuals, and that obviously some individuals are considering. I'm going to ask, obviously, the panel to expand on this, and the obvious starting point is Maria.
Hi. I think that it's very important that the audience gets the difference between tax residency and civil residency or access to citizenship, because most of the people get it confused all the time. So as Camila was mentioning, in order to have access to the new NHR or the old NHR, you basically have to become a tax resident in Portugal, and that means that you have to at least live here 183 days a year. For those that are not within the European Union, you will have to apply under certain type of visa, whether it's a D7 or a D2, or in the case that you don't want to have to be subject to so many constraints on the number of days or the type of activity that you want to do. The easiest route has been accessing to residency and towards citizenship through the Golden Visa route. As you probably are familiar with, the program has not ended, but it has changed. Since the 7th of October, real estate is not an option anymore, but you do have many other ways of accessing the Golden Visa program, mainly through regulated funds or through investment in companies. Another important matter that I would like to highlight is we have a lot of Golden Visa investors that are based in the US, in the UK, that basically want to have access to residency or citizenship as a plan B for the future. Now they're happily running their company in a very efficient way in their home jurisdiction, and they're not considering moving. However, in 5 years, they may want to move. So important, Golden Visa has no tax implications. So the fact that you apply for the Golden Visa or you get Portuguese citizenship through a Golden Visa has no tax implication unless you move to Portugal more than 183 days per year. And another important bit, we highly recommend our investors in the fund that to the extent the old NHR is back or the existing program applies, if they can apply for the NHR, even if they're not going to use it now, because they have 10 years to elect for the program. So that was very useful for many of our investors. I think it was not an advice that was given to many others. If you were under a Golden Visa program last year, you could have applied for the NHR and basically planned that maybe you don't want to use it now, but maybe you want to move to Portugal in 5 years and still have that option. So it's those things that you have to consider.
Excellent. Yeah, that is a really good point, Maria. It's a really good point. Get almost like get it while you can, and obviously you can utilize it, later on should you wish. Another question, Maria, for you. What sort of due diligence steps should investors take when evaluating these sort of Golden Visa residency by investment funds? Obviously, to ensure that they are making what is an informed decision about risk levels and their rewards.
I myself come from investment banking, and I've been a lawyer at Freshfields for many years. So I come from a very regulated scene of work. And I landed in Portugal 3 years ago. I started working as a founder of a hospitality fund that qualifies for the Golden Visa. And to be fair, I've seen everything in the Portuguese market. I've seen extremely super professional teams, but I've seen many projects that are not. I've seen funds offering guaranteed yields, buybacks, swaps with real estate. Whatever is too good to be true, it's probably because it's not. So if you're being offered any type of scheme that involves, I invest 500,000 euros in a fund, but then I get a prepayment of yield or a cash option for an equity at the end, and your actual investment is only 300,000 euros, just be careful. Get a second opinion from an immigration agency, from a law firm that's not recommended by the same investment fund, because normally sometimes that the law firms are conflicted. So there's many law firms that you can work here. Try to have funds that are managed by fund managers that have access to multiple funds under management. That's very important. They're not self-managed or managed by a small fund manager. And I also would say anything that involves a swap at the end with a real estate asset or a provision of a buyback of shares from an entity that's not capitalized. We've seen that a lot in the market. So a lot of these funds are basically guaranteeing that they're buying back the shares at a predetermined price, but the entity that's providing the buyback has no type of equity. So just be mindful. The fact the law states that one of the vehicles to invest into the Golden Visa program is through regulated funds. The minimum investment is 500,000 euros. And you have many serious investment funds, venture capital funds here that qualify for the program. Just be safe, because many times you're trying to save 100, 200,000 euros through the principal, and you're coming into a very risky transaction. So Just know who you're dealing with. Get second opinions. I know that you're going to have an index pretty soon.
Yeah, that's
I
coming very
think that's
soon.
going to be an amazing tool for everyone to understand who is who in the market. Camila, I'm sure her team can basically have a lot of opinion on who is a respectful player here. But just be aware, because what I'm seeing is quite worrying in the offers of products that I'm seeing. And yes, we all know how to structure. I was the head of structuring at Barclays for many years, so I can structure products where you can actually invest €1 and get the golden visa. But the purpose here is that the rule is set for a purpose, and we all have to be respectful about the current legislation. Well, that's my view. I don't know, Camila.
Camilla, have you got anything to bring to that?
One thing that I believe that's important to mention here, it's about the timing that Maria mentioned and Niall mentions. In terms of the NHR, if you are tax resident in Portugal in 2024, old regime or the new regime, the 10 years of counting, the year 1 is the year of tax residency. So if you apply the golden visa, but wait 4 or 3 years to apply for the tax residence, the first year, the year 1 of the 10 years is the first year of tax residence. So it's very good to pay attention to that, because most of visas don't require tax residence. So you can apply for a visa, check how is here in Portugal, maintain your tax residence abroad, not be in Portugal more than 183 days, not change your center of vital interest to Portugal, and all apply when it's good for you.
Yeah.
Make the tax planning, mainly if you have life insurance, because the 5 years and the 8 years that you maintain, it will reduce a lot of the taxation. A lot. It's like Neil mentioned about it. And other thing that's important, different from the old regime is still in force until 31st December 2023. If you apply the NHR, the first year of tax residence is 2025, and you apply the NHR in 2027, for 2025 to 2027, you don't have any tax advantages. The past regime, you backdated the effect. So you needed to be in mind that the NHR is not automatical, tax residence is not automatical, legal residence is not automatical. All needed to have your intention to do that. And you needed to fulfill the deadlines. For the NHR, bear in mind that it is last day of March of the next year of tax residency. So it's important to be in mind, it's to plan. If you wanted to use the regime, pay attention of the 10 years. Okay.
I think we've lost Niall. I'm sure he'll be back with us. Again, I was going to sort of change the focus slightly again and bring it on to obviously the inheritance and succession planning aspect of today's webinar. Obviously, I'd like to ask obviously the panel. I was going to start with Niall, but Niall's just dropped off. How does Portugal differ in terms of its inheritance laws compared to most of the other countries? So in Niall's absence, and hopefully we'll come back to him in a minute, Camilla, I'm going to sort of go to you on that one.
Camilla, I think you're on mute.
You're on mute, Camilla. Yeah, sorry.
Here in Portugal, what we have in terms of inheritance is that it's different than the other countries, because here in Portugal, what we have here is forced heirship rules, which means that you cannot dispose of your assets as you want it, even if you have a will. So what happened is in Portugal, if you have, in terms of the forced heirship, you need to be in mind that 15% of the disease state is guaranteed for the heirs. There is no doubt on that. And if it's more than one legitimate heir, the portion will increase on 16%. It's very important to bear in mind. I don't know, Steve, if you want me to continue in terms of inheritance law tax? I believe so,
Yeah,
that I can move
yeah.
on. Okay.
Please do, Camilla. Please do. Yeah.
Here in Portugal, besides of the NHR, that's very good. Besides of the beach, the food, and everything else that we have here, you can see by my back. It's a sunny day now. What we have here is we don't have inheritance tax, so this is very good. We don't have inheritance tax in Portugal. What we have here is stamp duty tax, and the stamp duty tax, as a rule, is 10%. 10% is the stamp duty tax. But if your assets go to your legitimate heirs, there is no stamp duty, so no tax. And the stamp duty is also related to territoriality. So this is related to the assets that you have in Portugal, and then if the heirs are residents in Portugal. So here in Portugal, so besides of tax, advantageous tax rules, we have also inheritance rules that it's very good to think about, to live in Portugal and die in Portugal.
And there's no gift tax, there's no wealth tax.
No gift tax.
I'm a Spaniard, and we're very close by, but our tax regimes are very different.
Very different,
and,
yes.
Although we have an NHR that's very similar to the new NHR 2.0. In fact, kind of the Portuguese copied the Spanish one. I think on this one, it's true that in Spain you have gift tax, inheritance tax, wealth tax. They put a new tax for worldwide wealth above 3 million euros. Other countries within the European Union are considering worldwide taxation based on citizenship. So I think a lot of Europe is going towards this wealth tax, worldwide citizenship taxations. And the fact that in Portugal, we're very light on all of these, from a tax planning perspective, it's definitely a jurisdiction to consider.
Definitely, I believe so.
Yeah, that's. I've just Niall's messaged me through WhatsApp. I think his Wi-Fi is gone in the building that he's in, so I don't think, unfortunately, Niall will be back with us. I'm mindful of the fact that we're reaching the hour, and our chat and the comments and the engagement from the audience has been excellent. We've got lots of questions coming in. I just want to reiterate that obviously within the next sort of 10 minutes or so before we wrap up today's webinar, we won't obviously get to all of the questions, but our team will endeavour to come back to everybody with answers within the next few days. So we've got some questions here, and I'm just going to go through a couple of them in the next sort of 5 or 10 minutes or so before we wrap up. We have a question in the chat from Jeffrey, and he is asking, are there any plans to expand the list of qualified activities under NHR 2.0 in the future to attract a broader range of professionals? Camilla, do you want to sort of take that one for me, please?
Yes, for sure. We believe so. As we mentioned, we believe that the full new regime could be amended. In terms of the professional activities, the rule mentioned that will be a specific rule for that. And when, we don't know. Let's wait. Let's see what will happen. Let's see.
Yeah, as we were saying, it is a moving object at the moment, and it's just a case of keeping our eyes open and our ears on the ground. As always, with any updates, anything that changes, we at Portugal Pathways, we've got a network of professionals, and obviously we have our ears to the ground. So if you haven't already, please sign up to our newsletters, and any changes, you'll hear about it first. So we also have a question in from Ruben, and he asks, following your case study on tax planning under the NHR regime, can you elaborate on the potential tax implications of selling assets in Portugal while holding NHR status? Now, Niall is back with us. Niall, can you hear us?
Yep. Hi, Steve.
Yeah.
Can you hear me?
Yeah, we can hear you. We can hear you.
Yep. Apologies. The Wi-Fi for the whole office went down, so I've had to leave where I was, go to another location where I can hotspot off my phone. So apologies. If
We
you guys were
commend your
missing me,
dedication, Niall. We commend your dedication.
others would have been off, but I'm still here.
Yeah,
so
absolutely. So I
yeah,
don't know if you heard that question from Ruben, whether or not.
I did. Yes, yeah, I did. So the question was about selling Portuguese assets while under NHR. Is that
That's
correct?
right. That's right.
Yep. The question then will typically the NHR won't help Portuguese assets. So whether the rates will then depend on what the asset is, whether it's movable. So whether it's investments, then you'll suffer capital gains, which I mentioned 28% here in Portugal, or if it's immovable. So if it's property, then the current rate is 50% of the gain, subject to the income tax rates also in Portugal, minus any inflation relief. So from an NHR perspective, the key thing is probably not to have your assets, ironically, in Portugal, because then you won't benefit from it. So it's best to have it offshore in that regard.
Brilliant. Thanks, Niall. Just going through here, I don't know if you've seen this one, Maria, but there's one here from Lisa, and she's asking, could you clarify how under Golden Visa hotel investments you start NHR but don't use it until you move 5 years later? How does that work? I don't know if you could decipher.
If so, basically, Camila, you can correct me if I'm wrong. To you explain, if you were an NHR, if you were a Golden Visa, if you had submitted your application for the Golden Visa last year up till December 2023, to the extent that you were gonna become tax resident, you could apply for the NHR up till, I think it's March 2025, correct? So, but you could not do it after that. If you want to apply the old rules of 2023 NHR. So if you're a current Golden Visa appliant and you've submitted your application for the Golden Visa before the 31st of December, you can still apply for the old NHR. You have until, I think it's this year, no? 2024 November. What's the deadline to apply so that...
The deadline to apply for the NHR is March 2025.
Okay, so you would have until March 2025 to basically consider yourself resident and be entitled to then apply the NHR for the next following 10 years.
Yes, but this deadline is not a preemptive deadline that we mentioned. So if you apply after March, there is no problem because you needed to be considered as a Portuguese tax resident still in 2024. So if you apply after, as I mentioned, you only use the regime after the date that you make the application. You cannot backdate the effects.
Okay.
So if you started the process for the Golden Visa still in 2023, you are probably covered on the grandfather rulings. And so you can apply for the NHR, the old one, still the old one.
For those that are considering Golden Visa investments, you would need to monitor what's the situation with the NHR, what amendments are coming through, because maybe what you want to do is when you submit your Golden Visa application, depends on whether there's new NHR regimes coming forward or not. Maybe you want to apply for it and have it dormant. I think it ties in with some of the conversations on whether you can have the NHR dormant for a few years or not, Camila.
You can have it dormant for a few years. Yes, you can have. You have the right for 10 years. Correct. If you use or not, it's up to you.
Yes.
Because this is based on the principle of taxpayer tax capacity. So if it's not good for you, you cannot use it, the NHR. Correct. The NHR, it's a typo. It's here in Portugal, you just have two tax regimes, tax resident and non-tax resident. And to be an NHR, you needed to be inside the tax resident regime. And to be tax resident in Portugal, and if you are from non-European Union countries, you needed to be legally here. And to be legally, you needed to have the visa. that Maria mentioned about golden visa, D2, D7, D8, blah, 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 all the Ds that you can imagine.
all the Ds. I'm obviously conscious of the time, and obviously I still want to get your final wrap-up thoughts. So I have one more question, and Camilla, I'm going to put this one to you. This one's from Mandy, and Mandy's asking, when structuring their wills and estate plans, what specific considerations should NHR holders be aware of to optimize inheritance tax planning for their beneficiaries?
So in terms of the inheritance tax, if you are NHR or not, there is no difference. You don't have any tax advantages. But as I mentioned, you don't have inheritance tax here in Portugal. So the issue that we can face, it's a small issue that's related to 10% if your heirs is not your father, your mom, your parents, your child, and your spouses. So the NHR, look at the NHR, you give you tax advantages in most of foreign incomes. As Neil mentioned, there is no advantage for Portuguese incomes, just if you have a salary or self-employment income. So that you can be taxed on 20% instead of progressive tax rate. But in terms of inheritance tax, you need to see as a tax resident, normal tax resident. Where is your assets? Where is your nationality? How long you are living in Portugal? If you have a real estate in Portugal, where is your heirs? Where they are tax residents? So there is a lot of information that we needed to check. So this is the reason that I believe that if it's your case, if your intention is come to live in Portugal, it's preferable to have a personal tax advice, mainly jointly with visa process if is needed or tax structure of your assets.
Brilliant. Thank you. Well, thank you everybody for answering those questions. And I do apologize. Obviously, we haven't been able to get round and answer every question that obviously the audience has put into the chat. Been a very engaged chat, but we can obviously organize any meetings with any of our panelists or our other professional partners. Obviously, if you contact Portugal Pathways via our website. I just wanted to reiterate to everybody in the audience that the new proposed NHR may be subject to some additional changes between now and the end of March next year. However, there is still the ability to get the old NHR, as we've been mentioning throughout, if you meet the grandfathering conditions in terms of being able to show your intent to reside in Portugal. And again, Portugal Pathways, we can arrange discovery calls with any of our partners, including the experts we have on our panel today. Also, if you want to have the flexibility of dual residency with your country of origin and Portugal, along with the rest of Europe, the Golden Visa residency by investment option may be the right one for you. If you have the flexibility of having your tax status either within or outside of Portugal. Again, talk to us at Portugal Pathways and we can arrange a discovery call to talk through the opportunities around the Golden Visa. I'd like to wrap up today, but before I go, I'd like to go around the room and ask each one of our panelists just to leave the audience with one key takeaway from today's discussion. So Niall, I'm going to start with you.
Good choice, Steve, just in case my connection
yes, you go. Yeah.
Thank you. So for me, the last comment would really be to do your research for anybody that is considering whether it's moving to Portugal, whether it's doing the golden visas, or whether it's looking to work with a solicitor, an accountant, or indeed an advisor like ourselves. Having gone through it professionally and personally through a lot of these areas and subject matters, then I can definitely say it's really, really important to seek and work with professionals in that area. I think the security and the peace of mind that you'll get from people who have been there and who have done it, who have the knowledge and experience, is well worth any fees that they might have to encounter as a result of using those services.
Brilliant. Thank you, Noel. Camilla?
So my message here is nothing is lost. By the way, I believe that anything is lost. So we have very good regimes in Portugal. We still have it. And so if you think that you could be framed on the old one or in the new one, contact Portugal Pathways and they will contact us, because what happened is the rule is changing automatically. We don't know what happened in 2025. So if now you think that you can apply, contact us and we can do it immediately. Don't wait for the next rule.
Yeah, as they say, don't delay, contact us today.
Don't delay. Don't delay tax planning. Don't do that.
Don't delay anything. So Maria, finally, across to you.
I was gonna give the same message as Camila.
Yeah.
It only applies not only to the NHR. If you have monitored the evolution of golden visa regulations, the amount have changed from 250 to 280 to 350 to 500, and it may continue increasing. The requirements and the type of assets have changed a lot. There's a lot of pressure from the EU to tackle immigration and citizenship programs in all of Europe. So I think every year we're going to see higher requirements and higher thresholds. So this is something that's important for you, for your planning of your family, of your tax affairs. Just start looking into it, because it does take some time to get the account open and choosing the fund, etc. So don't delay it, because we really don't know what happens next. So Spain has changed the program. Greece is changing the programs. There's a big wave in the EU to basically make these more expensive and more complicated. So if the NHR, taxation, education, healthcare, whatever your reasons are to consider a second citizenship, just get advice and move, because then we're here discussing why we could have not applied the NHR in 2023.
Absolutely. Well, it just leaves me to say, guys, thank you very much for your time today. Thank you, Camilla, Niall, and Maria. And thank you to the hundreds that we've had, obviously, in the audience today. Thank you for your engagement in terms of your questions and your comments. As I said, that we will get back to every question that we haven't answered today. Just to let you know that, again, a recording of the webinar will be sent out to everybody within the next 24 hours. Our next webinar, Portugal Pathways next webinar, is on the 16th of July, and the title is Investing in Portugal for the Future. And obviously that will include, amongst other things, obviously the golden visa, talk about investing in real estate. We'll be talking about structuring your income whilst in Portugal. So again, covering lots of topics. So again, go to our website and you can register there. Again, thank you, everybody, and we shall see you all soon. Thank you very much. Goodbye.